This is the state of the markets, and what we're about to show you is very serious. You have a bunch of dancing girls over here, and then you have the crypto people just right over here trying to get through their life, but absolutely in tears. And you would understand this because when you look at posts like this, the S&P 500 is up 9 days in a row and 9 weeks in a row. Everyone's in absolute euphoria. But what is Bitcoin doing? Absolute crash. You look towards the news, and Iran and America are just exchanging missiles like it's nothing. Brent crude had a breakdown, and now it's making its ways back up, causing more pressure on inflation. Like we told you in our last video, the markets seem very conflicted right now, and it's hard to follow the noise. But on some different aspects, Ethereum Bitcoin is showing strength. Altcoins against Bitcoin are showing strength. And some altcoins like ONDO are forming some really strong bullish patterns as well. So in today's video, we'll cover all of this and show you where there might be hope and where there might be despair. Hello, everyone, and welcome to Strategic Markets, your place for technical and fundamental analysis all at once. And now, into our midweek session. I wish I could have started with better news, but this is where we are at. Iran and America are just exchanging more missile shots, more counterattacks on each other. Iran basically said that the US attacked a communications tower on the south of Qasem Island, to which it responded with a drone and missile strike towards Kuwait's international airport. And then the US Central Command said that it conducted self-defense strike on Qasem Island in response. And then Iran retaliated with ballistic missiles towards its neighbors. However, all of them failed to hit their intended targets. So this is where we are at. Now, in the last video, we did cover that US and Iran negotiation aren't going well. In fact, they have pulled back off. And if we look over here right now, any type of talks with Iran is causing upwards delay of about 6 days to get responses. So this is a bit of a shady situation. It's not a good position to be at when you're wanting peace in the markets. Somehow, markets are still pumping, the SPX and the Russell, and we'll cover why in a second. But what else pumps with it is Brent crude, which is oil. And if we are breaking down from this perfect ascending wedge pattern, but now we found strength on the 100-day SMA, and we are making our way back up. Now, whether we test this 20-day and 50-day SMA and make our move downwards is a possible play if the geopolitical narrative hits well. If America does run out of its reserves or is coming close to it or has some supply to demand ratio issues, then oil can move back up. And when it does, it's not going to be good for the common people all around the world. Now, looking at the S&P 500, it's just pumping. 9 days in a row, 9 weeks in a row. One of the strongest, most unrelenting rallies in history. And this is great. If you are a stockholder, I'm really happy for you. You took a bet on Micron Technologies, Nvidia, Apple, whatever your soup was, you took a drink from it. The worst analogy ever. But yeah, when you look at it, the SPX is having a massive AI boom. And, it's just been making its ways towards highs fairly consistently. So that's great. The Russell as well, recently still showing strength, hasn't made a recent high in the last couple of days, but still on an upwards trajectory, still breaking out some really lengthy patterns over here on the daily. So that's really looking good as well. Then over here, this is the state of the crypto markets. You just got a bunch of girls trying to hype each other up from all different areas of the markets. Commodities, gold, silvers, SPX have all had their moves. And then anyone who's in Bitcoin, we're just crying over our past, possibly even our breakup situations when we were in all-time highs and now we are nowhere in that particular euphoria state. And something to comment on that news that came out today, Michael Saylor, the owner of the company known as Strategy, or priorly MicroStrategy, stole 32 Bitcoin in sale to basically be able to, based off his current product known as Stretch. I'm not going to go much into it, but it's a product where he has to sell some to be able to give 11% returns on people's stock ownership on an annual basis. But, the rewards are paid out monthly, and he has to test that liquidity. And it's actually good from a credit rating perspective on the S&P stock standard because he can exercise liquidity, and sale and buying of his investable strategies is a good thing, and therefore increases his credit rating from B minus to someday an A. Probably not a triple A, but definitely somewhat towards the benefit of an A. I read a little bit of research on that. But this is technically a little bit good for the markets because if he's selling 32 Bitcoin, he has somewhat about 800,000 Bitcoin. And that's a very small amount that he has to sell to be able to just give dividend profits to people. And market made a big deal out of this, but to me, it just seemed like a bit of a scapegoat for the markets to push down to certain areas of fear. Now, if you check out the crypto sentiment or crypto fear, right now we are in extreme fear. The reason why that is because we are testing this multi-month support line over here. Now, I've drawn this multiple times. I've shown it to you guys multiple times. And if you just see over here, currently on the daily, we are nearly testing it just perfectly. We're coming up for it. Now, I can see us go below this as well, because in the past as well, we have wicked below it and came back up. In about 9th of March 2020, we came down to 3,988 when it was sitting at 5,300. So we had a $2,000 drop at that time, which is like about 25% drop. So it wouldn't surprise me if we do go down this particular week to test the 200-week MA, standing at about 61, 62K over here. And it wouldn't surprise me if we just did that over the next couple of days because people are trying to revenge trade right now. They're thinking we're at support aspects, so we should just revenge trade and long this particular market. And I can see how that comes up bad. Now, I want this support line to hold because it's been holding for 8 years, right? And I have belief that it will. But there is a certain aspect in which we don't, and that could be triggered due to geopolitics or the AI narrative getting bombed or whatever the case is. I can't be a future teller, but my thesis is this 8-year trend line holds, and we might wick down or go down to 62K, but hopefully we recover back. But if we don't, it's a possibility that I kind of want you to be prepared for, because a lot of people in the crypto community are calling for 55K, 40K, and I don't want them to be right, but I don't get what I want in the markets. The markets decide. So on that, coming back to the daily projections over here, just to show you, yes, we've broken down from this bearish flag and we've broken down in a fair bearish structure. So yeah, coming to test 62K even on this particular structure is highly relevant and possible. You've got your RSI fairly oversold as well, and you've got multiple indicators just pointing towards bearish price action. I don't think that's a surprise. On the flip side, some positivity. Bitcoin's liquidation map is showing us that to the upside, we've got $16.6 billion worth of short liquidations to move the markets to the upside. To the downside, it's only about 1.5. Now, I'm not saying that we can't go down. I still believe we can. And like I said, 62K is a very reasonable possibility, grabbing us at 1.3 billion. But right now, I'm not going to also tell you guys to start shorting the market to 62K as well. Because to be honest, I hold a thesis and I want to be in a position of the contrarian bet generally. This is particularly a pace, not financial advice, where I'm looking to think about taking longs on Bitcoin if we found a reasonable amount of support structure. Because there's some other points I'm going to show you in the market that are showing strength. And one of them is Ethereum. Now, you look at Ethereum over here, we're still in this multi-year wedge pattern over here. We are right now testing some reasonable support. Again, this weekly support line that's held for 4 years. I personally don't think this breaks. And another bias that I have is Ethereum versus Bitcoin. While crypto community has been a bloodbath, everyone's just been in pain. And like I showed you the videos of the girls crying. Yes, everyone feels that way. But for some reason, Ethereum versus Bitcoin over the last 3 days has been showing strength when everyone in the crypto community is crying blood. So Ethereum is actually on a very good test point as well. And if it goes down to the 1800 or wicks below, which like it looks like it already has, unless it definitively breaks this particular trend line on the weekly, I still have hope. And again, similar story with Ethereum's liquidation map. $8.4 billion liquidity to the upside. To the downside, 646 million. So there's really not that much juice left to the downside, in my opinion. And even more interesting chart is altcoins. This is the total market cap of crypto, excluding Bitcoin, Ethereum, and stablecoins, guys, divided by Bitcoin strength. Okay, so this is altcoins in comparison to Bitcoin's strength, in the last 29 days, altcoins have just been showing strength. And look, if some of you guys don't have the right altcoins, you definitely got to be thinking about a reasonable narrative strategy as to what altcoins are going to be showing strength. We have been noticing some AI coins doing well, some RWA sectors doing well, some decentralized exchanges do well, such as your Hive, and then some graphic compute structures doing well, such as Render. And then one of the reasons why this could be happening is because Clarity Act, the act that's basically going to give legislative clarity to crypto assets in US legislation, is getting pushed through right now. And just today, it got announced that it's been put in the Senate legislative calendar for this particular month. So likely, this goes to Senate, then it goes to the House, and then it goes to Trump's desk. So a lot of people are probably seeing this happen, and they're saying we want to strengthen altcoins, regardless of what Bitcoin's doing right now, because we believe that the future legislative narrative of America is going to benefit altcoins. And that shows because something like ONDO, which has been a coin that we've been talking about, tokenizing securities on the blockchain so that it can be accessed all around the world. I have a fairly cool project. If you haven't looked into it, I highly recommend it. I have to take ownership and say, we were in this bullish flag. We came down. I believe this is a bullish flag and it could break upwards again and test the target of 55 cents. It didn't do that. I'm happy to take responsibility for that. Not every pattern breaks out exactly that you want it to. And we wait for the confirmations. Even though we wicked up, we closed below and we just never went up higher. But now we are forming this longer term bullish pennant pattern, similar to what I just showed you in Ethereum earlier. But this is much more on the smaller time frame on the daily. And it's a bullish pennant over here. And basically, if we break towards the upside, then yes, an altcoin like ONDO, which recently has made an announcement that they're going to be on the 6th of June releasing ONDO perpetual trading, which basically gives you the ability to leverage certain stocks in the US stock markets from anywhere around the world using crypto rails. So they've recently announced this, and that's why you're seeing Bitcoin lose strength today. But coins like ONDO having pumped 7% and 8% in the last just 2 days. So there are some positives happening in the market, and it looks like smart money is positioning relative to some future onlooking indicators. So if this is a tough time right now, I feel you. And if you're that girl crying right now, it's okay, because I might not be crying, but I definitely feel the emotions. But some of these onlooking indicators, guys, pay attention and position yourself. Look at the contrarian side, and based on that, allocate yourself should you need to. And on that, I'll pass you to Steve for his technical analysis.
Well, great work as always there, Yash. And going back to your ONDO chart there as well too, it's really interesting how actually, as you saw that pennant just getting gradually closer and closer and closer together as you're getting towards that 9th of June deadline. It's just a matter of basically it's going to break out one way or the other. So very, very interesting. Heading towards Bitcoin, let's have a look at that right now as we see things as well too. We are stuck in between a large number of support and resistance lines way back from 2021 at this point in time right now. We're going between 66,021 and 67,500. That's exactly where we are at this moment right now. And we're actually wicking in between those areas right now after a major plunge over the last couple of days. So really, really dramatic action that's occurred, falling from the area of around about 73,000 after it actually collapsed through that support level from March of 2024. After falling through the 100-day moving average, was that white line there. On top of that, you can actually have a look over on the left-hand side, being on the Ichimoku curve, and you can really see that lagging indicator has dramatically crumbled in relation to lower highs and lower lows, going right through and plunging right through that cloud. All very, very poor negative sentiment, in the short term at least. Whether we actually get a recovery up above these support and resistance lines here, firstly above the one from November 2021, being the 67,500 line, and then above the May 24 support resistance line of 69,300. That remains to be seen. But these are the areas that it needs to get above firstly before anyone can really start stopping those dancing girls from actually going ahead and stopping their crying. That's where we really, really need to see. So there's a lot that really needs to be done in terms of a recovery phase in terms of where Bitcoin actually is. That's the first step. When it comes to Ethereum, going on from where Yash was speaking before, he was basically a little bit more optimistic in terms of what the circumstance was on a relative basis compared to Bitcoin. The problem is when you take a look at Ethereum on its own, it still hasn't really shown any sign of any major positive momentum at all. You can really see that from the charts, really tracking along these short-term moving averages, as you can see right here. It hasn't had any break in that whatsoever, especially since we've been talking about this over the last probably couple of weeks, because you can really see ever since it's actually got through that 100-day moving average, it's just been negative steam all the way through, and especially over the last couple of days, really broken down. This breach here of the April 20th support line has really been quite dramatic, and it's not really having any luck getting back above anything that's going on. We're now sitting here testing this April 2025 support level of 1816. Let's see how the market reacts. At this point in time, we're wicking, and it's a matter of basically seeing whether or not we bounce back from this. We might come back, test it again, and then see if we can actually get above these short-term resistance, short-term moving averages. So it's a matter of basically seeing how things do go. Over here as well, in terms of the lagging indicator on the Ichimoku curve, lower highs, lower lows all the way through for quite some time. And that's coming back all the way to these areas here. So we're looking probably around about 2 weeks worth of action. So it's quite a lot of sentiment and not a lot of good positive sentiment in any way, shape or form. We'd really need to get back above this area here being that magical, if you want to call it, 2100 level before we're starting to see any form of positive sentiment here with Ethereum. But in terms of, say, a relative aspect, judging from what Yash was saying there before, we've got probably a little bit more relative action going on in terms of Ethereum compared to Bitcoin at this point in time. There is a lot of weakness going on in relation to Bitcoin, especially in comparison to Ethereum, in terms of how much of Bitcoin has plunged, especially on a comparative basis to Ethereum. So it's just definitely something to really keep in mind there. Now let's go across predominantly the indices. Russell in particular is another aspect that Yash had basically mentioned as well. Overall, like he was saying, hasn't formed too many higher highs directly in the last couple of days, but it is still very much along the lines of being quite a strong performer in general, especially bouncing off the short-term moving averages. Dow really powering along though. That's forming higher highs all the way through without a major issue whatsoever. In relation to the SPY, top 500 stocks in the United States, powering along, going absolutely gangbusters right now. Looks as though that's most likely going to be opening a little bit lower when the market's open in about an hour's time. The Qs going along really strong. Looks like that's actually going to be opening a little bit higher when the market opens in an hour. Now this really brings it along a very interesting point. When we look at the sectors in particular, which sector is really driving this market? Technology in particular is still driving the market really strong. It's something to really keep an eye on overall. Which sectors are not driving the market? Consumer discretionary is really not driving the market at this point in time. Even though we have got all of the major indices really going quite strong, we don't have the consumer heavily driving this market at this point in time. That is a particular sector that you would really want to have driving the market. But we're not seeing that. Until we start seeing sectors such as consumer discretionary and other particular sectors which really warrant areas along the lines of consumers, they're the kind of things that you really want to see driving the markets going. But at this point in time, we're really starting to see things like a one-speed market in terms of technology driving the market. And at the present time, we're also starting to see things like utilities driving the market as well. If you see utilities driving the market a lot more often, they're usually defensive kind of sectors, not the kind of thing you really want to be seeing driving the markets overall. So keep an eye on which sectors are really rotating into the markets overall and whether or not they are more defensive rather than an offensive kind of sector, such as consumer discretionary. Now, let's have a look at some of the other areas that are actually driving the markets as well. We've been covering this over the last couple of sessions overall as well too, but uranium. Now, uranium overall is one of those elements that has actually been discussed quite a lot in relation to the war. Previously, it was stuck within a lot of these moving averages. It actually broke out a lot in yesterday's trade in particular, and really broke out quite substantially. It actually went up about 5.7% in 1 day's worth of trade. So much so that it actually pushed its way through all of those moving averages that we were talking about in the last few sessions and went all the way up through all of the VWAPs as well in terms of the yearly VWAP and also the quarterly VWAP. So closed above both of those, which essentially means that now the buyers are in control of this particular instrument. So definitely keep that in mind as well. Does that basically mean that the war is over? That everyone's basically really demanding uranium and all of those kind of things there? Not necessarily. This is actually a very interesting kind of situation now in terms of everyone really wants to get their hands on uranium overall. Maybe they're basically feeling as though there's going to be a lot more demand in terms of this kind of aspect there, and there may not be enough supply as what's going on as well too. So really keep an eye in terms of exactly what's going on here with this. Which also brings me on to the aspect of Brent crude now as well. This is really fascinating in terms of the move that's been going on here. Because previous to this, in terms of what we were talking about over the weekend, was we were at this situation, in terms of this particular candle, we were actually trading below the yearly VWAP at that particular stage. Now we're above the yearly VWAP, we're still below the quarterly VWAP. But interestingly enough, now trading above the short-term moving average and looking as though we're actually above this particular 4-hour support level here and back within the range of these two 4-hour support levels, which is really fascinating. So we're basically getting back into range-bound territory once again. What's more interesting is we were actually discussing this potential support area here in the last session. Go back to that video if you want to as well in order to see that discussion. I won't go into it too much here, just in terms of brevity, in terms of time. But it didn't actually make it all the way down to this particular level, and it didn't even make it down to the 100-day moving average, which I thought was actually very interesting. But of most interest is that actually the fact that it didn't actually make it all the way down to there, which is actually showing more strength than anything else than the fact that it actually going back up before even making it down to here. So overall, it looks as though, in terms of oil, we're actually seeing a lot more strength than we actually even thought that it actually has. But what's even of more interest is, in terms of USO, we were actually talking about this as well in the last session. The fact that it was actually at that particular time, in terms of the end of the week, in terms of on Sunday's session, we were actually at this particular candle here, being between the two VWAPs, the yearly VWAP here and the quarterly VWAP being that purple line. We were there on Sunday. Now we're actually above both of those VWAPs. So the buyers are clearly in control in relation to USO. I'll repeat that again. The buyers are clearly in control in terms of USO. So we're actually starting to get a little bit more clarity now in relation to oil in terms of buyers now being firmly in control, especially if with Brent crude, we close above this $100.90 level at the end of today's trading session, which is closing in 8 hours time. So keep all of those kind of things in mind. What's also of interest is in terms of the VIX being the volatility, we did have a bit of an up day, not much of an up day, but keep an eye as to whether or not the volatility all of a sudden spikes because of this Brent crude rise as well. Should it start rising, especially above these short-term moving averages, we may start getting a bit more concern in the markets. Why? Look at the dollar. The dollar's starting to rise, and it's actually starting to rise quite significantly. Before this video started, the dollar was only around about this level here, just about the $99.30 level. We're actually starting to rise a little bit more than that right now, and may even take out the highs here. So really keep an eye on this by the end of today's trading session. Very fascinating. The bonds are actually looking as though they're actually starting to get back into this range area here as well. Should these bonds start actually falling beneath these September lows again, we may actually have the markets back into some trouble again. So really keep an eye on those areas there as well too. And in terms of the yields, if the yields start rising back above these short-term moving averages as well, we could actually start seeing some more pressure on the markets because, as we always say, as the yields start rising, that will start putting pressure on areas such as the Russell and also other areas of the markets, which will then put more pressure on the markets overall, and the story keeps on going. So a lot of things are going on in terms of the markets overall. Now, another area we didn't really cover even on the weekend, and I do apologize about that, is actually gold and silver. Let's have a look and see how the metals are going overall. You can really see that these are starting to potentially struggle again as well. Overall, what are we actually seeing? They're actually below the short-term moving averages at this point in time, potentially coming back to the 200-day moving average and these support levels from back in October again. That's gold. How about silver? Silver starting to test the 150-day moving average again. And if it starts to follow what gold is doing, we may even start to actually see that crack over this level here and then potentially come back to the 200-day moving average as well too. So once again, we have got a lot and a lot indeed of catalysts going along. It's not just crypto. We've got to really start thinking about a lot of other areas, many different factors that are actually influencing this market. Keep an eye on all of the aspects. You can really see the dollars coming into effect. The bonds, really keep an eye on those metals. A lot of factors coming into play, which can all have an effect in terms of the equities, which are really, really hitting these all-time highs, but whether or not these all-time highs are going to be sustainable. Until then, pass it right back to you, and we'll see you on the weekend.
Thanks for that, Steve. Like we said earlier, guys, it's been a chaotic week. And although there's a bloodbath, there's some really positive things happening in the S&P 500. Finally, even for oil, which is not going to be great for the long term. And at the same time, altcoins and a bit of strength in Ethereum versus Bitcoin as well. So a lot has to play out over the next couple of weeks. I personally am pretty excited, even though these are dark times in the crypto sentiment area. But keep an eye out. As always, if you liked what we had to share with you today, please drop us a like. If there's anything we could do differently, better, or you want us to cover something, leave us a comment. For today's word, let's go with crypto bloodbath. Put that in the comments. I want to see who is up till here with us, and your support really goes a long way. Thank you so much, Mark, as always, for commenting. And whoever puts a comment down, you're going to get a shout out in the next video as well. So greatly appreciated. But on that, thank you, and we will see you on the next one.
See you next time.